You want to know the real reason why your business isn't growing and how you're holding it back? It's actually your personal credit score, and while you may think this has no effect, I'll explain. One thing you should already know about business is that capital gets you the assets you need to grow your business, but your credit gets you capital. That's why your personal credit is a big key in getting what you need to grow your business faster. Now, most people want to try to build up business credit with the vendor accounts, and that's cool. However, that can take more time and more effort, and it won't be as efficient as if you use your personal credit. Now, a lot of people try to steer you away from getting the personal guarantee, and of course, we all want to get there. But right now, getting the money that you need for your business can happen a lot faster if you do the personal guarantee, and you can actually do that without providing proof of income in most instances if you go to the right banks. And then you can have higher amounts of credit reporting to your business credit profile, which is another aspect of what they look at when you're trying to make your business credit look good. So overall, using your personal credit can make your business credit grow faster and look better as well. And if you have good personal credit, you also don't have some of the limitations on options for funding. When you get to some of the higher tiers of the business credit from using the vendor accounts, you might be limited to using a lot of the store branded cards that you can only use at a specific store. But if you have good personal credit, you can get access to Visa and MasterCards, American Express cards that you can use anywhere for anything that you want while also building up points too. Even getting the ability to get some of that funding at 0% interest. So let's talk about some things you need to know about getting your personal credit to a good place so you can take advantage of all of those benefits that come with getting the business funding using your personal credit as a PG. So a very important thing that you need to know is what are the score ranges that lenders like to see in order for you to get approved. And then we'll talk about some of the things that go into getting your score into these ranges. So I'm going to tell you right now, you might have heard or seen, or maybe even you have been approved at a lower score, like let's say maybe low 600s or maybe, then high fives, more than likely not. But to be in a place where you're going to know pretty much that you're going to be guaranteed to get approved and to at least get the highest amounts of money that you can get based off of the credit score factor, you want your credit score to ideally be in the 700s or better. But I can also say at the low end, you can probably get away with it being at about a 680, somewhere around that range or better. Now, what I'm talking about is FICO scores. Of course, when you look at Credit Karma, that is not your FICO score. So it can range and be very different. So you want to make sure that you have a tool to use to look at your FICO score before you apply. I do have some of that in the description, so you can check out the credit reports I have listed down there. Now, a second factor that's very, very important on the personal side with your credit score is going to be your credit utilization. Your credit utilization is like the second most impactful thing on your credit score, right behind late payments. Now, the beauty about the utilization is that as soon as you pay whatever it is down, if it's in a high range, then you will immediately, really within the next 30 days or so, you should see a difference in your credit score. So if you have something maxed out at 100%, like I've seen a customer who had a credit score where we were just building things up for him, and basically he had went over the credit limit on a credit card, and of course that doesn't look good. Then after paying it down, he gained back about 90 points. Now, it's going to be different for everybody, but you can see it can make a significant difference just paying down the utilization on your credit cards. And also, even if you don't have like a stupid high, 100% high utilization, if you have still a relatively high utilization, higher than what the bank that you're applying at likes to see, they can also give you a lower amount, or they might even flat out deny you for the business funding because they see how much of your personal credit that you're using. When it comes to where you want your score to be when you're about to apply for business funding, I definitely recommend that you get to the single digits, get down to that number as close as possible. You don't want it to be zero, but get down to the single digits so that you can make sure that you are showing that you're using the cards, but that you aren't overusing the cards and that you're managing it well. Now, another problem can be you showing that you have late payments that are recent on your credit report. Now, late payments, of course, I'm talking about 30 days late. I'm not talking about, you just paying your bill a few days late. I'm talking about where you have a 30-day or more late payment showing up on an account on your credit report. Now, the more recent those are, like within the last 24 months and especially within the last 12 months, they bring down your score way more significantly. So if you have a lot of those, then basically that is going to lower your score by quite a bit. Also, it signifies to the lender that, hey, they were just recently, like within the last, 3 months, you were late on an account. You might be late paying this account too. And that's not something that we deem as favorable behavior. So since we can already see that you're not paying people on time right now, they're probably going to deny you. So that's why it's important before you're trying to get business funding that you don't have any recent late payments reporting on your credit report. Now, we're going to talk about a few things you can do to improve your score in just a second, but I just want you to be mindful and be thinking about the fact that when you're trying to get business funding, they are giving you lots more money than they will be giving you on the personal side. And the banks are aware of the stats that most businesses fail, especially if you have a new business. They're aware that most businesses fail within the first 5 years, but it's even more significant within the first year of a business. So the younger your business is, like I said, even if you're 5 years in, they know it's riskier giving money to a business, especially in larger amounts. So they are very, very particular about what is going on with your personal credit to see how you manage your personal finances before they decide if they're going to give you any money on the business side, let alone a lot of money on the business side. So your personal credit is very important to ensuring that you get all the money you need for your business. And I know a lot of people are really scared of using personal credit cards. And I see a lot of people avoid personal credit cards because they've heard horror stories or maybe they've misused them in the past and had issues with them and paying them back or tearing up their credit. And all of that goes to using something improperly. It's like a hammer. If you use it the wrong way, you're going to hit your finger. But if you use it the right way, it's going to get the job done. And I've seen that avoiding those personal credit cards actually leads to getting less money on the business side. For example, a lot of times what you will actually get is 3 times more the amount of money that you have been awarded for credit limits on the personal side. That's what they'll give you on the business side. So in the beginning, I noticed when a person had like less than 10,000 in personal credit, they would get significantly less money than a person that had, 50,000 in personal credit limits or 30,000 in personal credit limits. Not to mention the fact that having personal credit cards by itself is one of the main things that helps increase your personal credit score. Because if you have nothing negative on your credit, or if you get the negative stuff off your credit and you don't have any good accounts showing that you do pay things on time that are active open accounts, then your credit score is still going to suck. So you not only need the personal credit cards for building up your personal credit, you also need to be working on increasing those personal credit limits so that you can actually get approved for more on the business side. So what are some of the fastest ways that you can try to improve your personal credit? And by the way, if you're getting value from this video so far, make sure you hit the thumbs up so YouTube can know that this is a good video and show it to more people. It takes like 3 seconds. Just go ahead, hit the thumbs up button for your boy and subscribe to the channel so you can keep getting more information like this. Also, if you haven't heard any of the tips that I shared so far in regards to how your personal credit affects business credit, please leave a comment down below so that I can know if this is stuff you've already heard or if this is stuff that is actually new information to you. So I kind of mentioned this one already in the beginning, but basically, if you already got approved for credit cards, you have some on your credit report talking about personal credit cards, and you have high utilization, anything that is, above the single digits, very much so if you're above 30%, you want to get those balances down and get them to the single digits, because if you're above 30%, it starts to affect your score a lot more significantly the higher you go past that. So getting at least down under 30% will help give your score a boost. And as you go further down, you will also see some increase as well. So that's one thing that you really want to do, because that's like the easiest thing that you can quickly do to get some points back and get your score up. Now, the next thing is if you have negative items on your credit report, we're talking about late payments. We're talking about charge-offs, collections. All of those things can be dragging your score down. Now, most people think, paying off these accounts, doing a bankruptcy, doing a debt settlement are going to be the best options to deal with the negative accounts on their credit. But what I found is the fastest way to have something that is negative hurting your credit, to actually stop hurting your credit, is to have it removed, because the other methods that most people go to that I already mentioned, they don't get anything removed off of your credit report. In the rare instance where some collection companies might take a payment and remove it off, which most of them don't, outside of that, getting an item removed is going to be the best thing that you can do. And the best way to do that is through disputing. Now, I'm going to give you some of the best tips that you've ever seen for trying to dispute and get something off your credit in just a second. But I also have to mention that if you don't have any personal credit cards reporting to your credit report, then you need to get something reporting to help your score. So down in the description, I'm going to put a list of my favorite cards that you can use to build up your credit, even if you have bad credit score. And trust me, it is imperative to getting your score up if you don't have any credit cards. I've seen that credit cards are the best way to build credit. They improve your score better than getting a car loan or getting a personal loan. So you definitely want to get a credit card to build up your credit. Plus, it's going to help you with business funding at the end anyway. And now for those tips that you really need to hear on getting things removed from your credit report. I'm going to show you 3 ways that you can remove anything from your credit report in this next video. But if you want to make sure that your business structure doesn't get you denied or get you lower limits, check out this next video.